What if I told you that right now, as you watch this, criminals are stealing $5 million every single minute? Not with guns or masks, but with keyboards and spreadsheets. Financial crime has become the world's most profitable illegal enterprise, and chances are it's already affected you without you even knowing. In the next 10 minutes, you'll discover exactly how financial criminals operate, the massive scale of their operations, and most importantly, what you can do to protect yourself. By the end, you'll understand why banks spend billions fighting this invisible war, and why experts say financial crime is the greatest threat to our global economy. So, what exactly is financial crime? It's any illegal activity that uses the financial system to steal money, assets, or property. But here's what makes it different from a traditional robbery: there's no violence, no physical confrontation. Instead, criminals use deception, manipulation, and the complex web of our global banking system to commit what experts call white collar crime. And here's where it gets truly alarming. According to the United Nations, financial crime costs the global economy between $2 and $5 trillion every single year. That's not a typo. Trillion with a T, that's more than the entire GDP of countries like the United Kingdom or France. It represents up to 5% of the world's entire economic output silently being siphoned away. Let's break down the main types of financial crime, starting with the most common: fraud. Fraud is when someone deliberately deceives you to steal your money or assets, and it's evolving at a terrifying pace. Phishing attacks alone have increased by 60% since 2020, with criminals now using artificial intelligence to create increasingly convincing scams. You've probably heard of Ponzi schemes, where criminals promise incredible returns that are actually paid using new investors' money. Then there's identity theft, invoice fraud targeting businesses, and increasingly sophisticated cybercrime. In 2024 alone, Americans lost $5.8 billion to fraud. That's real people losing their life savings. Now let's talk about money laundering, which might be the most insidious of all. This is how criminals take dirty money from illegal activities and make it appear legitimate. Think of it like washing stained clothing, except the stains are criminal origins, and the washing machine is our entire financial system. Money laundering happens in three stages. First is placement, getting the cash into the system through small deposits or cash businesses. Then comes layering, moving it through complex transactions to hide its source. Finally, integration, where the now clean money re enters the economy through legitimate investments. Criminals move between $800 billion and $2 trillion through this process every year. And here's what most people don't realize: money laundering has evolved far beyond suspicious bank accounts. Today, criminals use cryptocurrency mixers to obscure transaction trails. They buy luxury real estate, often through anonymous shell companies. They invest in fine art that can be easily moved across borders. The methods keep getting more sophisticated. Next is bribery and corruption, the crime that undermines trust in our institutions. This involves offering money or favors to influence decisions, from government contracts to regulatory approvals. Transparency. International estimates that $1 trillion in bribes change hands globally every year, and the consequences extend far beyond money. But wait, there's more. Terrorist financing moves money to extremist groups through informal channels. Tax evasion costs governments $427 billion annually in lost revenue. Sanctions evasion helps rogue states access global markets. And insider trading lets people profit from information the rest of us don't have. Now, let me show you how devastating these crimes can be with three real cases that shocked the world. These aren't hypothetical scenarios. These happened, and they reveal just how vulnerable our financial systems really are. December 2008. Bernie Madoff confesses to running the largest Ponzi scheme in history. For 17 years, he promised investors steady returns of 10 to 12% regardless of market conditions. The total damage? $65 billion stolen from nearly 5,000 investors. Many lost their entire retirement savings. Madoff died in prison. Then there's the 1MDB scandal, which exposed corruption at the highest levels of government. $4.5 billion was laundered from Malaysia's sovereign wealth fund through bonds, real estate, yachts, and even Hollywood movies. The money flowed through Singapore, Switzerland, the United States, and beyond. It took international cooperation spanning multiple countries to even begin recovering the stolen funds. But perhaps the most chilling is the Bangladesh bank heist of 2016. Hackers infiltrated the SWIFT banking network, the system that moves trillions between banks daily. They sent fake transfer requests and successfully stole $81 million. They actually attempted to steal 951 million, but a spelling error triggered an alert. One typo saved almost $1 billion. These cases aren't just fascinating stories. They reveal the true cost of financial crime. Economically, we're talking about over $2 trillion drained from the global economy every year. That money doesn't just disappear, it inflates prices, increases bank fees, and forces legitimate businesses to spend more on compliance. But the social impact might be even worse. Financial crime doesn't exist in isolation. It funds human trafficking. It enables drug cartels. It undermines democracy through corruption. When criminals can easily launder money, every other type of crime becomes more profitable and more attractive. And it's the developing world that suffers most. According to the World Bank, corruption and financial crime trap nations in poverty cycles, diverting resources meant for schools, hospitals, and infrastructure into criminal hands. The ripple effects can last for generations. So, how do we fight back? Fortunately, institutions worldwide have developed sophisticated defenses, and understanding these systems can help you protect yourself too. Let me walk you through the key prevention strategies that are making a difference. First is Know Your Customer, or KYC, combined with anti money laundering programs. Every time you open a bank account and they ask for your ID, that's KYC in action. Banks verify your identity, check your background, and monitor your transactions for suspicious activity. It might seem annoying, but it's your first line of defense. But human review alone can't keep up. That's where RegTech comes in, regulatory technology using artificial intelligence to detect suspicious patterns. These systems analyze millions of transactions in real time, flagging anomalies that human analysts might miss. They can track cryptocurrency flows, map money networks, and even predict criminal behavior before it happens. Technology isn't enough on its own. Financial crime crosses borders, so fighting it requires international cooperation. Organizations like FATF set global standards. Interpol shares intelligence between countries. Financial intelligence units collaborate through networks like Egmont. Because criminals work together, law enforcement must too. Backing all of this are increasingly strict regulations. The European Union's sixth anti-money laundering directive, America's Bank Secrecy Act, FATF's 40 recommendations that set global standards. These frameworks require banks to report suspicious activities, verify customer identities, and maintain detailed records. The penalties for non-compliance can reach into the billions. But here's what keeps experts up at night. The threats are evolving faster than the defenses. Let me show you what's coming next, because these emerging threats could affect you directly. Cryptocurrency has created entirely new opportunities for criminals. The pseudo anonymous nature of blockchain makes tracking money harder. Mixing services like Tornado Cash can obscure transaction sources entirely. Stablecoins provide a way to move value without the volatility that might attract attention. Regulators are scrambling to keep up. Perhaps most terrifying is AI powered fraud. Deepfake technology can now clone voices so convincingly that criminals impersonate CEOs to authorize fraudulent transfers. AI generates phishing emails at industrial scale, each personalized to its target. And criminals are using machine learning to outsmart the very detection systems designed to stop them. And then there's trade based laundering, perhaps the hardest to detect. Criminals manipulate import and export invoices, overbilling or underbilling to move money across borders hidden in legitimate trade. Estimates suggest $2 to $5 trillion in illicit funds move through trade annually. It hides in plain sight within the global supply chain. So let's bring it all together. Financial crime is massive, costing trillions annually. It ranges from fraud to money laundering to corruption. Real cases like Madoff, 1MDB, and the Bangladesh heist show the devastating impact. Prevention requires KYC, technology, regulation, and global cooperation, and the threats keep evolving with cryptocurrency and AI. But here's the key insight you should take away. Financial crime prevention isn't just for banks and governments, it's for everyone. Understanding how these schemes work helps you protect yourself. Recognizing red flags can save your savings, and institutions that invest in proper compliance and training reduce their risk by 40 to 60%. So, what can you do? Stay informed about emerging threats. Be skeptical of too good to be true opportunities. Use strong authentication on your accounts. And if something seems suspicious, report it. Financial crime affects all of us, and fighting it is everyone's responsibility. If you found this valuable, share it with someone who needs to know. Because in the war against financial crime, knowledge really is power.